Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I'm wanted to go over the overall market. My bearish call has been on the S&P 500, and while we got a pretty big downturn on Friday, I'm still underwater on the bearish call. But I wanted to share my thoughts with this because it affects all my other long positions. So with that, let's get into it. So this is, one of so as a market technician, you have many tools at your disposal in your toolbox, and one of them is seasonality, which is really is just a tendency. It doesn't mean that, crude oil is going to follow a seasonality pattern all the time, or that the stock market is going to follow a seasonality pattern, but it is something to be cognizant of. And so you can see here um, over, the last 30 years, we've usually had a pretty bearish September, October, and that's when the seasonality starts to uptick into the fourth quarter, the Santa Claus rally, all that good stuff, even though the last couple of years that hasn't happened. But the seasonality tendency is for an improving equity market right about now. So, we're what's today, the 12th. So, maybe we get another down test of, according to seasonality, and then you have, off to the races. So, with this turning positive sometime in the near term, I'm cognizant of that. Is that going to be the only thing that makes my decision? No, but it is something to keep in the back of your mind. You don't want to, and so this is something that would make that seasonality chart uh, a very minor detail if this is the beginning of the long-term bear market that is flashing a caution sign here. So what this shows is back in 2000, from 97 to 2000, as prices went up, we got lower highs on our relative strength index flashing a caution sign, beware, a change of trend is coming. And you don't know when that's going to happen, but when it happens, it's something to be cognizant of on a much larger level than seasonality. In 2007, we had a very short 14-month or 13-month negative divergence before that downturn, but you can see the massive one that we have now going all the way back to 2017. And I've talked about this occasionally. In the back of my mind, this is always there um, because there's going to be a big correction at some point in time. And I certainly don't want to be on the wrong side of that. So that's why I've had 12, 13% of my portfolio, as I've mentioned, on the weekly call short the S&P 500. It's cost me a little bit of money, but it's pretty good insurance. But here's the bullish channel. Support here, resistance here. So you can see we're hitting our head right now on resistance. And so that's not really a great time to be buying. You'd rather buy when you get these big dips. This is a monthly chart. Each one of these uh, little bars or candlesticks represents a month of price action. So this is something really big picture stuff to keep in mind. And this is a weekly, so each bar represents a week. And this is again the bullish channel. And you can see we had a bearish engulfing pattern. We're hitting our head on the resistance line, and we had a bearish engulfing pattern where this prices started the week up here and ended down here and totally engulfed actually 1, 2, 3 prior weeks of price action. So, historically, that has caused some sort of a pullback. And, here's our bearish divergence, negative divergence on a weekly chart. So, and you don't always have to have, if you have a big one on monthly, doesn't mean you have to have one on weekly or daily, but we just so happen to have that. And then if we look at the 6 month chart or 7 month, I guess this is about a 10-month chart. This is a daily chart. So each one of these candlesticks represents the day of price action. So, here we went bearish, neutral, bullish, bearish, way too early, and then up, neutral. Then because uh, went neutral, then then I went bearish again, and so I went bearish at about 6,300, and we're currently at let's call it 6,550, let's say 6,600. So, I'm probably um what is that, 5%, down about 5% from my bearish call here. So I'm okay with that. And we also have a negative divergence here. So, uh, you know, one thing I want to point out here, we have Kelter channels. Uh, these are kind of um, show the range, the possible range on a security or an index, and you can see we're down to the support area of this. It doesn't mean it can't go down more. And this thing and the bottom of the Kelter channel the bottom falls out. That can happen. But this is like 95% of probabilities are within these channels. So a bounce here might be likely after such a big downtick. I was covering some of my shorts. I brought it down to probably 9% now. From 13, I'm down to 9% short the S&P 500. And if we got a rally up to the middle line here, I'd probably reestablish those shorts again. And so that's kind of where we're at on the daily chart. And on the intraday chart, this is a 2-hour chart. So again, we got our Kelter channels. You can see how the bottom fell out of this. So this only goes back like a month or 2 months. And what do we got? You always hear me talking about a bearish rainbow convergence when all the moving averages come together. Now, this is a 2-hour chart, so it's less reliable than, say, a weekly chart or a monthly chart. But for a trading position, I always look at an intraday chart before I make a change. And so I was covering those shorts because we're going to get one of two things, probably based on the 2-hour chart, and that would be a pause while the moving averages fall down to the price action. That would be a type 1 convergence, a la Tom McClellan, who created this or brought it to my attention, or a type 2 convergence would be a retracement back up to that uh, bearish rainbow convergence. And then if that's the case, and we've seen a lot of those lately, is if it can't break through, it promises a new lower low. So I will be looking to buy back those shorts if we get a rally. I'm expecting a rally. It doesn't have to happen. Maybe we start the morning with a little bit of a sell-off with people panicking and saying, "Oh, I'm just getting out now. They missed it on Friday. I'm just going to sell now." And then, the market rallies and we get some sort of rally. If we get back up here, I'll be buying those back. Usually I do it really slowly at the beginning, a little bit here, a little bit here. And then when it gets up here, but if it can't break through, then I would reestablish all those shorts again, and then this would be my out. Thank you for watching Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. Tell your friends, neighbors, family. Have a great rest of your weekend. Adios.